the green. You love to see the Russell 2000 here in positive territory. Although the rest of the markets are down, the Russell finishing up 0.3%. Let's bring in the man himself, Jose Torres, senior economist at Interactive Brokers, one of my favorite go-to guests here on the floor, and he's back again for more punishment. Welcome back to the show.
Great to be here, JD.
Can I get your take as we look up at these boards, not quite finishing at session lows, but this has been a wild ride the last week or so. What are you seeing across the major market indexes as you see these markets, and how investors have been reacting to renewed concerns over things like AI valuations?
Absolutely. So today you saw buyers come in, scoop the dip around the S&P's drawdown from the peak 5%. So we're down around 4% from the highs. So that's encouraging. Risk-off behavior. You saw a lot of buying of treasuries, gold, silver, volatility protection instruments. The VIX got up to 25, 26 today. So the defensive posturing. But we could have a saving grace on Wednesday and Thursday. NVIDIA earnings could be terrific. CEO Huang could come out and really bolster the outlook for AI, talk about how these capital investments, expenditures are really worth it and are going to deliver profits in the future. And then following Thursday, you have a non-farm payrolls report. If we get a modest miss, consensus around 55,000, if we get 40,000, not ice cold so that you start worrying about corporate earnings strength, but cool enough to widen the path for a Fed rate cut in December, those two things, and we can still get a big Santa Claus rally into year-end new highs. The worries on valuations, of course, AI, are these investments worth it? It's a lot of money. Then also you had, September, October aren't traditionally the best months. They were really strong, so maybe some backloaded seasonality we're getting here. And really off of 2 years, gains 20%. We're still up roughly 12% year to date.
Oh, yeah.
Not a terrible year.
Yeah, absolutely. You mentioned the VIX volatility catching a bid. You're right, it peaked out north of 25 for the first time since October 17th. So we're kind of bringing ourselves back into a little bit of a blip there. But you're right, maybe it's a bit of seasonality catching ourselves up. Talk to us much more about NVIDIA. It's the biggest dog here on Wall Street, the most consolidated name for the S&P 500. What will you be looking for? A little bit more in detail out of Jensen Huang and his company tomorrow after the bell.
Yeah, the expectation really on the street is for a beat and raise, but we're really looking for them to blow it out of the water. We want Jensen Huang to come out and dismiss a lot of those concerns about circularity and about how the Mag 7 are essentially funding their own projects, each one another. So if he dismisses some of those concerns, talk about some more chips, dismiss some of the depreciation concerns, and that can really bolster animal spirits. As far as the economy, employment numbers, they have been particularly weak. We can get into ADP numbers, Revelio, Challenger, but the issue is, JD, that inflation is elevated. So that's really keeping the Fed at bay, and that's hurting the speculative areas of the market, like Bitcoin, like high beta, Russell 2000. Those stocks, those assets, JD, they need rate cuts to keep going higher.
I got less than a minute. Let me get your preview here on retail earnings. Tomorrow morning we hear from Target, TJX, a handful of others. What are you looking for to give us a bit of a sense on how strong the U.S. consumer is right now, Jose?
Yeah, unfortunately, JD, I'm a little pessimistic going in. We heard from Home Depot this morning. They canceled their forecast. I think it's going to be the middle and the lower income consumers going to keep having trouble. Prices too high, interest rates too high. Wealthy consumers really carrying the economy. But now with the S&P potentially, I'm hoping that it's not, but potentially going into a correction, that can start a theme to watch will be if the wealth effect starts to dwindle consumer spending, if the wealthier folks start to stop spending. Finally, our prediction market really expecting Q4 to be a really weak quarter from a GDP perspective, about 0.8%. Government shutdown, longest in history, primary culprit there.
Yeah, we'll see what happens with the S&P 500. Today was the first time since April 30th. The high, the low, the open and close, all intraday session underneath the 50-day moving average. So we'll continue to watch how the broader market indexes respond. My man, thank you for being here as always. It's great to have you kick off the broadcast. Josh, going to grab your mic. We'll talk with Jose Torres soon. Bobby, you and I are going to head this way and go for a walk, and we're going to take a look here at the semiconductor ETF. It is equal weighted. When we talk about that defensive risk off trade Jose and I were just chatting about, we're better to look than shares here at XSD. We are here somewhat on the day. Fourth down day in a row. That particular ETF down 17% off those recent highs on October 29th. Still up 18% from the start of the year. Besting the S&P average so far year-to-date performance. Some of the most consolidated names there in XSD include Rigetti, Intel, and Micron. All right, as I awkwardly walk back through the crowd and try not to trip over my own shoes, we're going to take a look at not one but two NYSE notable companies here on the day. Unfortunately, a fair bit of profit taking for both these names, but we got to start with Cloudflare, because if you're like me and you woke up and you tried to log on to the internet tomorrow, you might have noticed a few problems here, specifically for websites like X and ChatGPT. Tom's guide said a huge chunk of the internet goes down. That's a pretty good description for what happened. 6 days in a row down for Cloudflare stock, off 25% off its recent highs from November 3rd. The stock, however, still up 70% year to date. Apologies to everyone who couldn't quite get a lot of websites working earlier on this morning. Bobby, finally, we'll take a look here at Home Depot. Jose and I were just talking about the state of the home builders. Home Depot down 6%, a huge gap down after cutting that full year guidance. Weaker consumer spending, a weaker housing market, all that equals weaker demand for home improvement projects. The third quarter in a row that Home Depot has missed on earnings per share for its quarterly report, wiping out all of its post-Liberation Day gains. Home Depot stock now down 11% from the start of 2025. FinTech TV's very own Vince Molinari caught up with Captain Abdulaziz Al Ghamdi of Saudi Arabia's National Security for operations at City Space Global in Riyadh. Take a look.
Hey JD, thanks. Well, as you know, we're at Cityscape Global 2025. We've been covering everything real estate. We're bringing something a little bit different. We're at the Ministry of Pavilion. That covers everything that keeping the country safe. That's roads, passports, across the different spectrums. Right now I have the spokesman of National Center for Security Operations, Captain Abdulaziz, with us. Welcome to the show.
Yeah, hi.
Well, Captain, tell us a little bit about your role and some of the things that you're doing to keep everything safe.
Well, first, I would like to talk about the Ministry of Interior's Pavilion. Here we are participating to show the people what's the most advanced technologies we have to keep them safe. First, I would like to welcome you in the Ministry of Interior's Pavilion here in Cityscape Global exhibition. In the Ministry of Interior's Pavilion, we are showing the people the advanced technologies we have to keep them safe. And here we have different security sectors participating. Each sector is showing what technologies they have and how they are making our country safe and secure.
Well, fascinating for us, particularly as FinTech TV, as we're always covering the latest in technologies, artificial intelligence, drones, everything goes in, and how you've incorporated. I know there's a lot of it that you can't speak to specifically given permissioning, but I'd love to walk and maybe we can continue to talk as we see some of the great advancements that's being utilized here.
Yeah, please.
Great, come on. So what do you attribute so much of the safety to in the country when we look at Saudi Arabia, particularly compared to areas of the US where there's such a low crime rate?
Well, I'll start by talking about the National Center for Security Operations. The center has something called the Unified Security Operations Centers, 911 in 4 regions till now. Mecca region, Al Medina region, Riyadh region, and the Eastern region. Each center is responsible for answering the 911 calls in the region. We answer all the calls in less than 2 seconds.
That's incredible.
Yeah, because we have a very advanced system. As soon as we get a call, the 3 main informations show up: the name, the number, and the location of the caller, which makes our job easier. And we send the report, if there was a report, to the specialized security entity in less than 45 seconds, which gives like a quick and very fast response to the call.
Incredibly inclusive, Captain. You mind if we walk and maybe past some of the other greatest technologies that I know you can't speak to, but we'd love to highlight it as part of our journey here. Logistics here have been just absolutely outstanding given the amount of people. I think it's 170,000, so very well tuned. Just before we close out, Captain, anything else that you want to share with us on the 911 systems?
Well, if you have any problem here in Saudi, please don't hesitate to call 911 and we will be at your service.
I appreciate it, sir, and thank you for spending the time with us.
Yeah, of course. Thank you.
Let's do it. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the show to bring you the latest news you need to know in the world of fintech, crypto, and AI-related headlines. First up, crypto ending its long-running slide here after Bitcoin dipping below 90,000 earlier today. Now with BTC, ETH, and Solana all up on the day. What a wild ride it is to track crypto, right? Next up, Fidelity rolling out its first ever Solana ETF, ticker symbol FSOL. In doing so, becoming the latest big asset manager to rush into the Solana trade. And finally, in the world of AI, Google unveiling Gemini 3 today. It is the most powerful model yet, dropping new benchmark records and a coding tool called Anti-Gravity. That's a cool name. Now, at this point of the show, Money 2020 Scarlett Sieber explains how fintech company Plaid really makes its money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and on today's segment of how fintech companies actually make money, we're going to be pulling back the curtain of Plaid, the API whisper of fintech. Plaid is the company that turned your bank account into a plug-and-play experience for every app you've ever used to move money, invest, or split that very expensive rent you had. Plaid was born out of frustration. Its founders tried to build a personal finance app and realized, wait a minute, there's no easy way to connect to bank accounts. So they pivoted. Instead of building the app, they built the infrastructure. And that pivot, it changed fintech forever. Plaid is now the invisible engine behind apps like Robinhood, Venmo, Chime, and Coinbase. If you've ever linked your bank account to an app and thought, wow, that was easy, you've got Plaid to thank. They're the backstage crew of the financial internet, quiet, powerful, and very, very profitable. Plaid's promise, connect your bank account in seconds. But behind that seamless experience is a business model that's anything but basic. So how does Plaid actually make money? Let's break it down. Number one, API access fees. Every time an app wants to peek into your bank account, Plaid charges for it. Whether it's checking your balance, verifying income, or pulling transaction history, Plaid gets paid. It's like charging rent for every glance at your financial soul. Number two, the freemium model. Developers get a taste for free, up to 100 connections. But once they scale, it is pay to play. Think of it like the Costco sample strategy for fintech. And who doesn't love those mini hot dogs? I know I do. Number three, premium products. Plaid's got a whole suite. Identity verification, KYC, income checks, and even payments. Each one comes with its own price tag. It's a fintech buffet, and every dish does cost extra. Number four, subscription fees. For high volume apps, Plaid offers monthly plans. The more data that you pull, the more you pay. It's SaaS meets financial plumbing. And number five, partnerships and data licensing. Plaid partners with over 12,000 financial institutions. Some deals include exclusive access and data. Sharing arrangements is part of that, of course. Translation, they're not just connecting banks. They are monetizing the pipes, people. Whew. Plaid isn't just a connector, it's a toll booth. Every time your app talks to your bank, Plaid's cash register ring, ring, rings. So next time you link your account, remember, Plaid's making bank. Off of your bank, that is. Back over to you.
Welcome back to the broadcast. You're watching Taking Stock. Now we'll bring you the latest headlines you need to know in the world of startups, raises, and rounds at this hour. First up, Microsoft and NVIDIA. What a story here. Investing $30 billion in AI startup Anthropic as the cloud maker expands its push to challenge OpenAI. Wow, what a story. Next up, Ramp jumping from a $13 billion valuation to a $32 billion valuation in less than 12 months, landing yet another $300 million round. And finally, Peak AI raising $21 million as brands race to track and optimize all of the ways they show up in AI search results, with the Berlin-based startup tripling its valuation in 4 months to now above $100 million. Time now for what is always my favorite part of the show, not just an outstanding guest interview, but a guest who just rang the closing bell. One and all, say hello to Bevan Wurzba. He is Chief Executive Officer at Southbow, who just did the honors here at the NYSC. Congratulations.
Yeah, thank you very much. It was pretty exciting.
Can you talk to me first and foremost about the experience for you personally and your team to ring the iconic closing bell? It was a great energy tonight here for the group.
Yeah, you know, it took the entire team, those that were here and those that are in the field across Canada and the U.S. in our business to get us to this point. We've had a tremendous run. We're a year and 2 months old and ready for the next 20 years. So.
Energy infrastructure investment is a crucial story. It's always been a crucial story, but today in particular. Give our viewers a bit more of an introduction to your work at the company for anyone who might be a bit unfamiliar.
Yeah, so our business is the spin out from TC Energy. It occurred last October. We launched our IPO in New York on October 8th last year. And so we have the critical infrastructure of all the oil pipelines from Canada down to the Gulf Coast and into the Midwest, Patoka, Illinois. So we've been in, the asset's been in business for 15 years, and it's a part of energy security for both Canada and the U.S.
Bevan, what would you say are the biggest challenges, but maybe also the biggest opportunities to do and work in both countries?
Well, literally, we're part of an integrated value chain. Our supply customers are in the oil sands. They're producing the most resilient and high-quality heavy crude barrel in the world. And our strongest customers are the demand markets in the Gulf Coast, the strongest refining market in the world in both the Gulf Coast and the Midwest. So we're the bridge between those two supply and demand sources, so we feel like integrated part of that system.
Yeah, here in the United States, there's such a renewed conversation this year over the regulatory environment, the permitting process. Is it that much more difficult to have to navigate rules of the road for two different countries, or have you found for the most part, given that there's such an entwined nature for your business in all the North American countries, that's a bit easier to navigate?
Well, I think this year's been a breath of fresh air. We've had two administrations in the United States as well in Canada that are in constructive dialogue around what energy means for both nations, and that hasn't been the case for the last decade. And so we feel that backdrop is really helpful for us in terms of continuing to grow our business.
Yeah, and speaking of growing your business, got to talk about the stock price. You're up 17% from the start of the year. You are far outpacing the broader S&P 500. What have been some of the keys to success behind the name as a publicly traded company this year?
Yeah, we've been consistent. In July of 2023, we set out our plan and we've hit every single milestone along the way in the journey. And if you deliver confidently for your shareholders and you attract a good shareholder base, you'll deliver value. And so we haven't skipped a beat, and we look forward to continuing on that journey. So.
Yeah, I got about 30 seconds or so left. Give me some sense on what's on the horizon, the pipeline, if you will, so to speak, for 2026.
Yeah, so we just got off of all of the TSAs effectively with TC, so we're now a fully spun company, so we're not spinning anymore, and now we're going concerned entities. So we've been really going to focus on growth this year and optimizing business, and then accrete that value back to our customers and our shareholders.
Bevan Wurzba is the CEO of Southbow, the guest himself who rang the iconic closing bell. Congratulations. Thanks for being here on the show.
Thank you very much
Great
for
to have
having
you.
us.
We'll do it again soon. Folks, don't go anywhere. Much more coming up here on Taking Stock, including the latest and all the interviews you need to see from Cityscape Global in Saudi Arabia. More Taking Stock coming up after this. Welcome back to the show, one and all. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. FinTech TV's Vince Molinari recently sat down with Mohammed Al-Badi. He's the CEO of the Saudi National Housing Company at Cityscape Global in Riyadh. Have a look.
I'd like to welcome Mohammed Al-Badi, who is the CEO of the National Housing Company, NHC. Mohammed, a delight to join us today. We really appreciate it.
Thank you very much. It's my pleasure to be with you today.
Well, I'd love to start out. I know NHC is the largest developer of real estate here in Saudi Arabia, but maybe you can give us some of the background, the rapid growth, and how NHC is really aligning with the vision of 2030 goals of Saudi Arabia.
Thank you. NHC has been established as one of the Saudi Vision initiatives through housing program back in 2017 or mid of 2017. And we are proud that we are not just a real estate developer, but we are a key driver of Saudi Vision 2030 through housing program and to achieve one of the most ambitious targets of Saudi Vision, which is increase the home ownership percentage to 70%. At that time, the home ownership percentage was 47%. By end of 24, which is a year ahead of 25, we achieved 65.
Wow,
That's
congratulations.
Thank you very much, which is a year ahead of the 25 target. And where NHC has played a major role and contributes on that target. So at that time, the government has allocated to NHC a large land bank, and NHC has established at that time with the operating model to build its capabilities in its own and to be partner with local and international developers. We act as a master developer. We develop livable communities. We're trying to raise the standards of living for communities, not just to build homes or to develop lands. Where back then, most of the development in Saudi was just developing lands. Now we have a new idea or new concept of master planning the infrastructure. Sell a unit, not a land, through a private sector developer and NHC itself. We are active in 17 cities in the
17
cities.
Wow.
We have more than 25 destinations. We have a target to supply 300,000 units by end of this year. We are almost there. The 20,000 units only remaining to achieve the first target, which we just supply it, offer it to the market in the next 2 to 3 weeks. So the first milestone as a company to supply is achievable. We invest a lot. We have a partnership as well in the digital with the local and international. We signed an agreement and established a company with one Korean company called Naver, which is one of the largest technical companies in South Korea. We will invest in some technology in the smart cities as well as in the data centers. So this is NHC in a nutshell. And there is a lot to do in the future.
Well, incredible progress when you talk about everything from the development to the whole supply chain, the ecosystem, the technology. Our host, Remy, but I'd love to have you back again and continue these conversations because I think this is so enlightening to the global audience, particularly our audience in the U.S., of what's happening in Saudi Arabia and the investment opportunities and the progress that's happening. So congratulations to you, Mohammed, your leadership, and to all that's happening at NHC.
Thank you. Thank you very much. Thank you.
Welcome back to the show. First thing tomorrow morning on Wall Street, we will hear quarterly results from a lot of the retailers, including TJX and Target. And tomorrow after the bell, the big one, NVIDIA, NYSE, and FinTech TV live tomorrow morning at 9 a.m. That's going to do it for Taking Stock, and we will see you tomorrow. Woo!